Hello, team. How are you doing? I'm going to talk to you about two products that we use for one of our last clients that we are actually going to um, close this Wednesday. We proposed on Sunday, going to close on Wednesday, right? So just remember this when you go to see a personal potential client, whether it's a lead or a referral, any sort of thing, even when you're communicating with a friend or introducing yourself to someone, there's three words you should always learn: introduce, propose, and close. Okay, so we introduced, we proposed, now we're gonna go close, right? So this client that we've seen, we're at the very end of serving her primary needs with the client husband there, which is financial planning. We asked some very, very vital questions that we always ask. We asked in a very advanced manner, which is pretty simple. Do you have any qualified accounts that are stagnant, such as a 403B, 401k, or 457, right? She says, well, I do. I don't know what you mean by stagnant, but I do have some accounts. Can we see the statements, please? So we see the statements. There's about $500,000 of money that she has to retire, and we're there to help her retire, right? We're agents, right? You have a license to offer life insurance, and if you took your 8-hour mandatory course that we have a 50% discount on, you can, for 8 hours, if you took that mandatory course and you have state-specific requirements and company-specific requirements already met, you can offer annuities that are qualified account annuities, okay, such as a 457, 401k, 403b, or traditional IRA. Therefore, we're going to take qualified money from the 403b and traditional IRAs that she has, and we're going to move them into our traditional IRAs. That's called rollovers. Okay, so take a look at this concept that we're proposing, that we're reproposing to close on Wednesday. So we have $500,000. Okay, so what we do is we let the clients know that we're going to come back for the reason that it's a comprehensive type of situation. That's where we're going back on Wednesday. Now, this is what we've done so far. We've done our due diligence and checked out products so that this way the idea that we have is going to fit well. Our idea is to do a split annuity on qualified money. Split annuity. Wow, what is that? Well, a split annuity is when you take a primary chunk of money, which is what she has, $500,000, and you split it into two annuities. So what's the purpose of the split annuity? Well, here's a perfect example. We're going to take $150,000 for the reason that she needs immediate money, and we're going to liquefy it. She's going to receive a distribution of $1,500 a month for 10 years. She's going to liquefy it. It's going to disappear in 10 years. So that would be a total of $180,000 after 10 years that she would receive from $150,000. That's a $30,000 profit during the 10 years that she will make. That's exciting, okay? Now, the $350,000 that we're going to split into another annuity, okay? Both of them are going to be traditional IRAs, so that this way one will be liquefied in 10 years, and the new one that we're going to start after the 10 years that she has liquefied that money, it's going to restart. Not restart, but that's when she will start the what is called a GLIR, which is a guaranteed lifetime income rider. It's amazing, guys. It's amazing. So here we have $350,000 that we put in here. By the way, the client was 62 before we put this money in there. Now, 10 years later, she's 72. Okay, so the $350,000 you could put into any annuity. You could do this concept with any insurance company. You could say, I'm going to use this concept and I'm going to take it to my carrier. You could do that all day long. But let me tell you what we have here. On the SPIA, which is the single premium immediate annuity, the liquefied money, the first 10 years, we have a high interest rate. 9.10 is the issue factor. So there's a lot more comprehensive realizations that you need to understand. Okay? There's a lot of components that you need to understand. Going back to the $350,000 one. So here we are. We have, based on the rule of 72, if you have a 7.2% rate of return, you will have your money duplicate in 10 years. Okay? So actually, if you have a 10% rate of return, I apologize, it's in reverse. Okay? Your money will duplicate in 7.2 years. Okay? But now, so let's take a look here. If you're going to have a 7.5 rate of return, then when will your money duplicate? 10 years. Yeah. So if you get a 10% rate of return, I apologize, your money will double every 7 years. If you get a 7.2 rate of return, your money will duplicate in 10 years. The whole concept here, okay, is that you want to find a product that will duplicate in 10 years. So if you have $350,000, in theory, the product will duplicate from $350,000 to $700,000. It will compound duplicate. Okay? $350,000 to $700,000. It's unheard of. No, we're not offering volatile investments. No, we're not offering non-compliant type investments. We are talking about a guaranteed annuity. It's an amazing product that we have. So let's see here. It has a 7.5% rate of return for 10 years. $700,000 is what she's going to have in 10 years. She started with 5, so now she has an extra 200,000 in her in the second split annuity, which is the 7.5% rate of return annuity, right? Okay, so she took out 180,000. She took out 180,000 already liquefied the first 10 years. So 10 years later, you add 180, okay, to what she duplicated, the 700. Okay, now she has 7 plus 180 is $880,000. But they gave us 500 grand. They took out 180. They still have 700. Do you see that? Now, if you weren't there and if you don't learn from us, then when you see this client, you will probably leave money on the table. The way that I look at it is, hey, every client that I go see, I'm eating a turkey dinner. You know, I love Thanksgiving, so I'm eating turkey dinner. So if you go to a Thanksgiving feast, are you just gonna eat the yam? That's what you're doing, just selling a final expense. Are you just gonna eat yam and trimmings? That's what you're doing when you're selling mortgage protection. Are you just going to eat a turkey breast? That's what you're doing when you're just selling equity index UL. Okay? So what we do is we take the whole financial picture, we wrap it around their retirement, and we give them a full benefit type program that is advantageous for them with the concepts that we have in our teachings to you. Okay? And with our products, these two products aren't even from the same carrier. They're totally different. You wouldn't even know. They're not one of those modern carriers, okay, that you hear about. No, sir. You need to go through us, Decanon Financial and Insurance Agency, LLC. We are a marketing distribution hub for your agency, your agents, you, so that this way we can maximize the potential income for your agents. for your clients, for your agency. Marketing is something that's very necessary. These are concepts that a lot of agents will neglect. A lot of final expense agents are over there talking about how if you don't just listen to concepts, let's go to work. Okay, great. Go to work and go eat the yam. Fine. Okay, go ahead and sell 50 policies so that you can make the same amount we make with one client. You see? So now we are advocates of final expense. We are advocates of mortgage protection. We are advocates of just traditional term sales. We are advocates of you just selling an equity index UL on your concept base. But take advantage of the full picture with marketing, concepts, and not just concepts, but technology. Not just technology, but affiliates. Affiliates as how we're partnered with other entities so that this way we could provide leads to the agents. But the number one rule is if you want to be in our marketing agency, understand our concepts, take a full advantage of it, and you join our business, please. The more you call us, the more meaningful it is to be in partner with you. This way you could get off to a full start right from the beginning. It may take you 3 months. It may take you 2 months. Or you may be one of those fortunate ones that like to work. And you take off the first month. But you will not be able to take off if you do not call us. My direct cell phone number is 909-733-6374. Our toll-free number is 888-604-6620. Our website is www.decanonassociates.com. You could always talk to the president of the company, not the carrier, 909-360-6167. This is JR and Keisha, owners of Decanon Financial and Insurance Agency, LLC, a marketing distribution hub for your agency and for you as an agent. Have a great day.